Welcome, everyone. Thank you for joining us for today's virtual book launch and panel discussion on effective trading in financial markets using technical analysis, published by Routledge, an imprint of Taylor and Francis Group, authored by Dr. Smita Roy Trivedi, Assistant Professor, International Banking and Finance Group at the National Institute of Bank Management located in Pune, and Mr. Ashish Kyal, author and founder, Wave Strategy Advisors, and Ashish Kyal Trading Gurukul. I am Rajni Dhingra from Marketing Department at Taylor and Francis Group. This book is an illustration of your groundbreaking approach, and we are proud of your association with Routledge. Just a little housekeeping before we get started. If you have any question during the session, please type them into question or chat box. I will bring them up post the session. If you wish to ask question to any specific speaker, please add name along with the question in chat or question panel. Looking at the time limit, we will try to address as many questions possible, else we'll pass on your details to panelists to revert to you later. This webinar will be recorded and shared afterwards via email with all attendees. Your mics are muted. Our respected speakers and panelists, Dr. Smita Roy Trivedi, Assistant Professor at National Institute of Bank Management, Pune, and engaged in teaching, training, and research in international banking, foreign exchange markets, technical analysis, and algorithmic trading. In 2018, she published her first book, Financial Economy, Evolutions at the Edge of Crisis, published by Routledge, an imprint of Taylor and Francis Group, with mentor Dr. Sutanu Bhattacharya. Her research has been published in noted journals with Springer, Wiley, and other eminent publishers. Mr. Ashish Kyal, founder of Wave Strategy Advisors, author, is a chartered market technician and member of CMT USA. He has worked with leading investment banks like Lehman Brothers and Nomura Holdings. His articles have appeared in newsletters CMT USA, International Federation of Technical Analysts, Reuters, and Bloomberg, and other such eminent publications. Ashish is a frequent speaker on CNBC TV 18, ET Now, Bloomberg, Quint, Rajya Sabha TV, and at NIBM. Akshay Chinchalkar is an MBA from Mumbai University, a chartered market technician, and MSc in Accounting and Finance from the London School of Economics and Political Science. He is also a global board member of the CMT Association and currently heads the Electronic Trading Solutions Department for Bloomberg South Asia. In his 16-year-old career in the financial services industry, Akshay has been an index options for commodity futures trader, has headed the equity derivatives research side for a regional sell-side firm, and over the last 11 years at Bloomberg has been responsible for building Bloomberg's technical analysis, data viz, and quantitative analysis franchisee for the Middle Eastern and South Asian region, with a focus on equities and the fixed income currencies and commodities world. We also have Shoma Chaudhary, Commissioning Manager, Routledge, Taylor and Francis, India, and our virtual audience. It gives me immense pleasure to extend to you all a very warm welcome on behalf of Taylor and Francis, India, for today's book launch. Taylor and Francis Group publishes more than 2,700 journals and over 7,000 new books each year, with a books backlist in excess of 145,000 specialist titles. We are providers of quality information and knowledge that enable our customers to perform their jobs efficiently, enhance their education, and help contribute to the advancement of their chosen market. Today marks the release of our latest title published by Routledge India Original, Effective Trading in Financial Markets Using Technical Analysis, published by Routledge, an imprint of Taylor and Francis Group, authored by Dr. Smita Roy Trivedi and Mr. Ashish Kyal. Congratulations to both of you. We are very proud to celebrate this momentous occasion with our guest today. We will be circulating order form to all our attendees interested in buying the book with discount code and purchase process and terms and conditions after event. I would now like to start the program today by requesting our authors and speakers, Dr. Smita Roy Trivedi, Mr. Ashish Kyal, and Mr. Akshay Chinchalkar, to begin the program to share their knowledge and rich experience and perspectives with all of us. Thank you.
Thank you. Thank you so much, Rajni, for that wonderful introduction to us all. I have to admit that it is such a big pleasure for me to be a part of this monumental event, so to say. I've had the pleasure of knowing Smita and Ashish for many years now, and it is my privilege, to be a part of their network. This is a matter of pride for all of us, particularly for the technical analysis community. And I can promise everyone in the audience, this is just the start of much bigger things to come. So many congratulations, Smita and Ashish. You've made it all.
So much.
Thank you.
So let's dive straight in. I'm sure the audience is very eager to know about your journey and how this whole idea came about. So let me start with that question. Tell us a little bit about this whole idea that crossed your mind, and how it all happened, about writing a book that will delve into the very interesting aspect of the world of technical analysis, and what should we expect from here. So Smita, you want to go first?
First of all, thank you so much, Akshay, and it's been a huge learning experience knowing you, and it's wonderful that you could join the event today, because the idea for a comprehensive kind of textbook on technical analysis was there with me for some time, as I was teaching a course in technical analysis for the PGDM students at NIBM, as also engaging with participants in our training programs, where both of you are an important part. And of course, I was also in this phase developing my own research questions on financial markets. So at this juncture, I felt a fresh perspective on technical analysis would be much appreciated. And of course, let me be very honest, at the beginning, I was a little skeptical as an academic about technical analysis, because I felt if markets were efficient, there's not much forecasting of prices is largely ruled out. So there's not much that technical analysis or anything else can do. But then I came at this to this very interesting literature on technical analysis. On one hand, the very compelling evidence globally of the use of technical analysis by market professionals, and also on the profitability of technical analysis. So on the first aspect, in one of the very famous papers in 2007, Lucas Minkoff and Mark Taylor called technical analysis the obstinate passion of market professionals, which I feel is true. And then when you combine it with the profitability of technical analysis, the evidence, the very compelling evidence on that, then I started forming my own research questions on technical analysis. Why is it effective, and how to make it more effective? And I really felt that we can have a book on the tools, more comprehensive details on learning technical analysis, using it more effectively, as also tying it to the broader perspective of financial market research. And luckily, of course, I've been interacting with a lot of market participants, and Ashish sir has been coming to NIBM for a long time. Even before I joined NIBM, he's a regular as an industry expert. Of course, Akshay, you have also been with us for so many years as an industry expert. So it was wonderful that Ashish sir could join me in writing of this book. And with Routledge, of course, the second association has been equally wonderful. So over to you, Ashish sir.
Okay. So
Ashish, I want to ask you. I've known you longer than I've known Smita. I remember from your Lehman days, and I remember our conversations on technical analysis even back then. But it's hard for me to kind of, when I first learned from you that you were, on the verge of launching your own book, I kind of instantly asked myself, was this idea ever in some corner of your mind like 10 years ago, or did it happen just a couple of years ago? How did it even happen in your case?
Okay. Akshay, to be very honest, everything started in 2008, right? So
Yes.
it was not an end but a beginning for me, because as we met way back in 2008 during the Lehman days, there was a bankruptcy that happened in Lehman Brothers. And during that point of time, I was always looking at why the stock price is going down or up, but I was looking from more from the fundamental perspective. And that 2008 was an eye opener for me, because regularly when I was evaluating and speaking with my seniors, they always said nothing can go wrong with Lehman. And then came the September 2008, and we all know what happened. So the market as a whole knew at that point of time that there is something which is going to come out eventually. So that was an eye opener for me in terms of technical analysis. And from there, I realized that a few years back when I was speaking at NIBM also, and fortunately, Smita asked me whether I'll be a part of something like this for writing a book. I said, I do write a lot of research reports, and I think it should be okay for me to write a book as well. To be honest, that was my impression. But when I started collating everything, writing my mind out and researching and doing it, it was such a huge responsibility. I realized that why did in the first place I agreed to writing a book because just writing research article is so different than writing a book. There is a responsibility that you have and onus that you have to ensure nothing is wrong that you have written. So that is where the idea actually kicked in. I always wanted to write something, share across my journey, share across my experience in terms of using multiple methods of technical analysis, share across what happened in 2008. I thought that I will be sharing across more of 2008 and 2013 when we started writing. And coincidentally, the pandemic happened in 2020 and the book was yet to be published. So fortunately, we had the opportunity to put in together the 2000 March 20 collapse, and then we also had the opportunity to put in together post what has happened. One very important aspect that I found was lacking in majority of the books was the practical approach as a trader, how to look at those charts, right? So everyone talked about the theory, but I don't see many people talked about the practical approach with the charts. What should be the trade setup, how to club everything together, and that was the need of an hour. So that is what instigated me to go ahead and say yes to Smita for writing a book, because that was much needed. And coincidentally, 2020 happened, which really was a very big event for everyone, going to be known for millennia. And I think the book is coming out exactly at the right time when it is needed the most. So thanks to Smita who pushed me for it. And yes, that's how the entire journey started.
I can tell you from my experience with Smita. I mean, I've known her for a little over a couple of years, but when she wants you to sign off on something, she's unrelenting. So I totally agree with what you just said.
So thanks, Akshay. But let me ask you, because you have also been with the markets for so long, and because with NIBM, because of NIBM, I know you for a long time. What has been, but I don't know what has been your journey into technical analysis and why you came into technical analysis or developed your own expertise. So why don't you share a bit on that?
You know, in order to answer this question, I will have to go back to my youth, but that's fine. This was roughly about 14 years ago. I mean, I was fresh out of college. I had completed my MBA, and I was out there to conquer the world, or so it seemed back then. So then I joined this regional brokerage, joined them on the proprietary trading desk, where I was one of 4 people responsible for trading index options. And as I began my career, I day one of my job, I walk into the dealing room and I see 4 people. One who's obviously the head of the desk, the other whose money I'm going to be betting in the markets, and one person who was doing some strange things on what seemed like a chart. It was my first ever exposure to a chart. he was drawing some weird trend lines and some he was trying to draw some, I think it was a triangle. I don't quite remember what it was, but that was like 14 years ago. But it was the first time that I was actually looking at someone interacting with a chart. And then the fourth person was the dealer who was going to be executing all of the deals on behalf of the owner. So, I was fresh out of college, armed with a lot of knowledge around derivatives and fundamentals and asset allocation and portfolio management and so on and so forth. So, I used to read a lot of books on the job. I was new, a month into the job. I just became very curious because all this other person did every single day from 9 to 5 was draw some strange, lines on a chart. So out of curiosity, one day I went and asked him, I see that you're doing some really interesting stuff. I didn't really mean that though. I said, you're doing some interesting stuff. Can you tell me about what these lines are? Why do you keep drawing these triangles and some strange formations? And he said, oh, Akshay, this is technical analysis. It's not for people fresh out of college. You guys tend to be non-believers. So I said, you can open out to me. You can tell me what you're doing, and I can probably learn from you and assist you in the future. Maybe just give you a helping hand. And somehow I think it occurred to me that this person was probably feeling threatened by my motivation to learn technical analysis. So he brushed me off, saying, this is not your area. Just focus on what you do. And in some sort of a way, there was some spark within me that told me that. Because he's trying to brush me aside and not encourage me to learn this strange methodology that he's using, let me do some googling, look at what this concept of technical analysis is, and that's how it began. So often you would agree that when somebody implicitly tells you that you are probably not going to be able to do something, you are that much motivated to actually go into that domain and master it.
Exactly,
That has been
yes.
my story. So that's how it all began.
Absolutely.
That's very interesting, people from fundamental going into technicals. I think that has been the story for many of us. So, yes.
Excellent. So, you mentioned this just now, Smita, the whole, the perennial debate between the two schools of thought, fundamentals versus technicals. And I want to, pose this question to Ashish. I mean, this one question has haunted everyone, be it a portfolio manager or a technician. Every portfolio manager and fundamental analyst thinks, technical analysis is voodoo, it's
Yeah.
black magic, and almost every technician that I've met thinks that fundamental analysis has lost its place in the sun. So this is a debate that will never end. But I want to get Ashish's thoughts on whether he thinks these two schools of thought can actually coexist, given today's dynamics.
Okay. Yeah. So to be very honest, I think Akshay, it's a very interesting discussion that we can have around this, and the debate can go on and on and on. But I think there is no, one should avoid debating. The way I see it is, if you look at a simple fundamental parameter like price to earning ratio, you can argue that it's a fundamental or technical. My question to you is, do you want to end up arguing whether you call it fundamental or technical, or you want to ensure that information is used for either making money in trading or giving you some aspect from investment decision? So for me,
Absolutely.
anything that can be plotted, is you call it as a fundamental or technical, I don't care. What is important is what information do you get out of it. If you plot price to earning ratio and look at it, you see how beautifully it has moved within the channel. You can clearly see it's quoting somewhere around 35. You know what to do next once you have that information. So arguing whether the fundamental works or technical works, or those are contrarian, or there is a new school of thought which is fusion analysis, combine both fundamentals and technicals, I think you have to adopt to yourself, your personality, what works for you. If you are a fundamental guy who is trying to just not knowing technical analysis and trying to demean it, not done, because you are losing out a huge opportunity that you might be having there. And if you are a technical guy and you're just trying to figure out, okay, the fundamental things does not work because you might not know it. No, I don't rule out any possibilities. So let's keep the possibilities open. Let's try to marry across whatever works for you as a trader, as an investor. Call it a price to earning ratio, call it a price to book ratio, call it anything and everything. In fact, if you look at an employment generation across the globe and simply plot it, you will see a pattern in that. If you look at the population growth across the world and plot it, you will see a pattern in that. Everything is patterned, everything is fractal nature. And once you plot that and you are able to see a pattern, you will be able to explore that pattern for future analysis or for taking a trading decision or for taking an investment decision. So for me, plot anything, and it's up to you whether you want to call it fundamental or you want to call it technical. So that's what we have talked about in the book also in much detail.
Awesome. I can't wait to read the book, but I'll throw this curveball at Smita. I mean, she's an academic, and like one of you rightly said at the start, to convince an academic to start believing in something called technical analysis, and she's nodding her head, so she understands where I'm coming from.
Yeah.
So, Smita, while you were making that transition, I'm sure you had to, convince a lot of people that this is actually a school of thought that has its merits. But how
Mhm.
difficult was that transition?
Yeah, so actually, I get asked this question every time when I interact with students, or I think a lot of market participants also when they come for training, if they have traded so on based on fundamentals, they would ask this question. So based on research, what immediately comes up is that in the shorter time frames, technicals is used more, but then there has been a lot of papers showing that a unified approach, many participants use both, and a unified approach to understanding market movement always works better. So like Ashish was saying, we have to build it together. We cannot ignore fundamentals because if you see the last couple of decades, there has been such an integration happening in financial markets globally. And there's also a very destabilizing influence of news that we see. In that kind of an atmosphere, I cannot ignore what's going behind the chart movement. But again, what happens is, if as a trader on an intraday or a daily basis, I try to bring in all those factors into my decision making, it would be fairly not only difficult, it would be completely not possible for me to trade objectively. So technical analysis gives you that much needed discipline. Unless we have ways to put news or sentiment in just a number or a couple of numbers or in this index. So unless that happens and there's a robust technique to do it, I think we need to have that disciplined approach where technicals can help you cut out all the noise and look at what is in the charts, or have it use quant to get something out of it where you can trade effectively, make your decision making easier. So for me, I think and as I think we agree, going ahead, I think much of mingling between these two areas are needed if we look at the kind of markets that's happening. What's your views on that, Akshay?
I want to cycle back to what Ashish said. Ultimately, trading success is not defined by what methodology you use. What defines whether you are a successful trader versus someone who tried his best but could not consistently outperform the markets is that at the end of the day you have to make money. Your winners have to exceed your losers. It doesn't matter whether it was technical analysis, fundamental analysis, astrology, or just the fact that you wake up on the left side of the bed every morning, you go long. If you wake up on the right side of the bed every morning, you go short. This is what my first employer told me. He was punting his own money, and he told me, Akshay, you read a lot of books, which is very good. They'll kind of enhance your knowledge and help you have better conversations with people you meet in your career. But he said, ultimately, what I want to see is you can tell me, the sun was conjunct Mars this morning, so you should go long. If that makes me money, I won't care. You'll get a bonus. So that's what it used to be. So ultimately, what matters, if you ask me, and that hasn't changed in the last 14 years that I've been in the markets, is that are you making more money than you're losing? It doesn't matter what technology or what methodology you use. That's my 2 cents.
Yeah, absolutely. I mean, that's brilliant. That's how it is, right? People end
Hmm.
up fighting with each other, what to call it. You can either be busy making money or you can be busy fighting across the name. Up to you what you want to choose. So, Akshay, I want to put across a very interesting question to you again. Which indicator do you think is the most underrated one, a very powerful one, but most underrated or criticized for known or unknown reason? What do you think?
A very interesting question. Yes.
Look, I'm not as much a veteran as any of you, but in my limited experience, I can tell you that out of 1,000+ meetings that I might have done in my financial career, the most underrated technical analysis tool, if you ask me, is price. What has happened over the last few years is that people have been focused more on fancy looking charts,
Mhm.
fancy looking payoff diagrams. The more the color, the more intelligent you seem to the opposite party. But what I have seen is that in this whole race to kind of complicate things more and more, just to seem and sound intelligent, people are losing track of how important a metric price itself is.
Mhm.
A lot of people, I've learned this the hard way over the years. So I started off when I started my career, looking at technical analysis and deploying it, in the markets. I also started with, indicators and so on and so forth. A lot of quant, the RSIs of the world and the Bollinger Bands of the world. Now, not to say these things aren't important, but
Mhm.
if a certain technical indicator is asking you to do something, the decision making or the ultimate trigger for you to buy or sell something should be driven by price. So fine, you look at the indicator. Oh, the RSI is diverging from price. That's great. But is price telling me that it is willing to reverse? If not, then I'm going to cancel out what the indicator is trying to tell me. So for me, somewhere along the way, I know a lot of technicians who've been in the markets for so many years. If you and someone with like 3 or 4 decades of experience, if you ask him what is that one thing on the chart that you cannot live without, he will say price. But if you look at the traders of today, who've probably had like a half a decade worth of career in the financial markets, if you ask them what is that one thing that you cannot live without, in 9 out of 10 cases, the answer will not be price. It will probably be RSI or Bollinger Bands. So somewhere I think the importance of price has been pushed back, but I continue to be a believer in the fact that conventional technical analysis, which focused a lot on price and price patterns rather than indicators, will never go out of style, because that is the genesis of and the whole backdrop of how technical analysis evolved. The price is the ultimate indicator of the mingling between the emotions of fear and greed. Uh, as long as you can understand price, trust me, you don't need a single indicator on your chart. And that is what I like about Elliott weights, which is something that I believe I'm proficient at, just like you, Ashish. The great thing about Elliott is that it is, for the most part, focused only on price. You would agree.
Absolutely.
So those are my thoughts.
Okay. Perfect.
What about so let me throw this at Smita. I mean, firstly, how long have you been in this technical analysis ecosystem, Smita? Has it been roughly about 4 5 years?
Yes, so I am, and then again, 4 5 years, I have continuously tried to bridge it with the academic research, because as you said, for academicians still to get into a very kind of believing mode. So I keep on backtesting, and I ask myself whether this is this is what research would prove, or can research support this. Let me add to something you said, which is very interesting. Looking at price, I can tell you one thing which I think you'll like. We have been doing, a survey of the market participants for some time. Luckily, we get a lot of people at NIBM, so we keep on asking them several questions on how they trade, what do they do, and there are, when for the Indian market I did it, I was surprised to find that a lot of people just look at candlesticks, which again is the same thing. They just, the price movement. What is the candle itself tells you much more on anything else. What is happening in the market, how the bulls and bears have thought, how they have acted. So people do look at that, and That's kind of good, because as you're seeing, technical analysis, if we go back to Dow theory, that's what it's all about. Just look at price and try to get something out of it. Very interestingly, as you are telling, like, as an academic, when I try to bridge this with the research, I have come across one of the candlestick patterns, like a variant of the candlestick charts, which is the Heikin-Ashi candlestick. And I'm sharing this because I have done some research on this, so I can back it up with the empirical evidence I have found. And I have developed an indicator based on this Heikin-Ashi chart, which I'm calling Hastock, Heikin-Ashi stochastic. It gives momentum and trend well, and we are finding good results in backtesting. So I think, even a Heikin-Ashi, when I just change the chart to Heikin-Ashi, the kind of information it can give me on the trend, again, for any market participant, and not only for a trader, for anyone who is trying to understand the movement in the markets, this is so important, just to know the trend. So I think, price, I would agree on that. So it's a variant of that. When you just look at the trend which is there, that itself is so potent. There is so much of information, and of course I think going ahead, more of that would be very important. Yeah, over to you, Ashish. What do you feel?
Ashish, tell us your thoughts. Do you continue to believe that price is the ultimate thing, or would you say certain things? Because I know that you're a price purist, but have certain things in your experience changed your view of that, or do you think price continues to dominate?
Okay. Yeah. So I would say that I, yeah, price is definitely supreme. There is nothing beyond price, because ultimately you are buying a price and selling a price. You are not doing anything else with indicators. So as you rightly pointed out, a lot of people are just too much of focused on an RSI. You can't really focus on an RSI, and you can't really understand how to trade unless you understand the price. So price is the most important aspect that you have to keep a focus on. But 2020, something has changed. I realized time is the most underrated tool, because 2020, the March pandemic which started, not the pandemic, I'll not call it a pandemic issue, I'll call it the markets, the way it crashed. If you had been an off even by an hour, you would have lost a fortune, or you would have made a killing in the market. So timing the market has become essentially all the more important along with price. So time is also a very underrated tool which is not talked about in the books. In most of the books, there are only a few books where I have come across where people have talked about time. Most of the books have talked about price. Price is definitely important, but if you are not able to time it well, maybe to the day after, for example, if you would have gone on a holiday on 10th of March and would have come there and looked at the market of 20th of March, you would have gone crazy. The entire world has changed. So time and price both are very, very crucial, and time is a very important element, and we have focused on the time also in the book, because and for the prices, Elliott wave, candlesticks works brilliantly, and how to combine those things together is very crucial. What I've also observed is many of the people forget about debate between fundamentals and technicals. People who practice candlesticks says Elliott wave does not work. People who practice Elliott wave says cycles does not work. That's the problem, because that's the mind. Mind wants to divide. We wants to combine everything together in order to become a successful trader. So I think the what is required right now is a proper mix across the price, across the time, and whatever works, that should be applied.
Yeah, that's true.
I agree. I think time is as important, if not more important, than price. But it kind of takes us back to the roots. When you load a chart, the
Yeah.
the two elements that you see are price on Y and time on X. You need nothing else. Good. You've summed it up pretty well, both of you. Okay. So my next question, and Ashish is in the groove, so I'll throw this at him. Tell me about the USP of this book. Why should someone buy this book?
Okay. There are multiple reasons that one should consider buying a book like this. Now there are already plethora of books on technical analysis and written by the gurus of technical analysis, because that is what we have read and we have
Huh.
grown up from there. Okay, so
Yes.
those are all, with all the respect, those are beautiful books that one can go through it. But what I have found is a lack of a practical insight inside a book from a trader's perspective. That is what I thought is lacking. So majority of the book focused on the approach towards explaining an indicator, which is very much necessary. But what I found is they have lagged in terms of practical application of those indicators. A chart is shown, but not from the practical aspect of a trader, that what should be the entry point, what should be the price point, how you can combine all of those things together. In a nutshell, you need to combine things together, but that
Yeah.
is lacking. Each of those chapters have been independently written in most of the books, and they have not combined those indicators together. So a book talked about candlestick independent to the Elliott waves, independent to the cycles, independent to indicators. What we tried to do is to put across all of those things together and give you a chart with an explanation on a single chart. So if you go through the book, and eventually you will find that every chapter is being covered again and again and again in in the form of a practical example. I still remember the book when we were completing the book. That point of time, it was April. Crude was trading at $24 before it went negative. The view written in the book, we have mentioned about how the view is and why crude has been in negative territory, and it should continue to do so. It went negative. So that's like an anticipated happen. We are not forecasting that, but it was. I also remember Nifty was trading at 9,100 levels at that point of time, and how market rallied all the way on the upside despite of the pandemic. So majority of the people look at the news to take the positions, but it should be exactly the opposite, because the market moves first and the news try to catch up later. If someone wakes you up after a year, say in 2020, and asks you that there is a huge pandemic the world is facing, what do you expect the market to do? And show you a chart, where do you think the pandemic was on the chart? I'm sure you are going to point at March, and you are going to say that March 20th, the pandemic got over. But look at what actually happened post March 20th. The pandemic started picking up world over, in India, in US, and the market started going all the way on the upside. So that's like a contrary to what you think. So that's a very interesting aspect that we have addressed in this book. Also, 1987 was a huge crash that we saw world over in the global markets, in US, in Asia, India. But in 1987, crash was very similar to what happened in 2020 now again. Yeah, so the book explains very clearly that if you look at the sectors that bottomed out, it was pharma first. And again in April, we have shown that chart which mentions and shows that the pharma should bottom out. In April, imagine that April talked about pharma sector, not basis that the pandemic is going to result into profitability of a pharma stock, but on the basis that 1987, the first sector to bottom out was pharma. In 2008, the same scenario repeated, and in 2020, the same scenario repeated. So I think the USP of the book is definitely that, where we are comparing 1929 with 1987 with 2008 and now the 2020, all of those things together, and trying to collate how Bollinger Bands can be combined together with Elliott waves, with cycles. And Smita has done a classic work from the academician perspective, how it looks like from an academic perspective. I have combined it from the trader's perspective. So it's like a marriage between an academician and a trader. And my mission is to make academician believe into technical analysis to the core, the way Smita is doing right now.
Together we will make it happen, Ashish.
Yeah.
You made some
Absolutely.
very interesting points, and I've basically picked on two of them. The first is obviously around how real life examples when discussed in a book attract a lot of eyeballs. So I'll give you an example of a meeting that I was doing only yesterday evening with a client who's thinking of getting herself a Bloomberg terminal, and I was running her through all of the capabilities in terms of back testing and how you can code. And after about an hour, she stops me and she says, Akshay, I've been in this business for 20 years. I know how to trade. I know how to make money. What I'm lacking is how to make money consistently I understand the concept of back testing and factor modeling and blah blah blah. Show me with real life examples as to how you can bring all of these things together, because that is the only thing that will help me make money and make money consistently. So I totally agree with what you said when you started off with your comments. The other thing is, this whole concept of whether events actually cause moves or whether it is price that moves first. And you gave the example of the pandemic in 1987. I think Robert Prechter and the work that his Socionomics Institute have done in this respect is absolutely phenomenal, right?
Absolutely, Akshay. Since you pointed out his name, I would just like to share across Robert Proctor has edited the Elliott wave chapter in the book. So,
Yes, he
Wow,
was.
that is
Yeah.
really amazing. Smita, your thoughts, take it away.
Yeah, no, like what you are saying is absolutely, both of you, what you are pointing out is correct. I think this book, if you ask me what's the USP of this book, I think it has been that we have tried to bring together that conceptual clarity with the practical examples. So it's kind of a juxtaposition of the academic and the market practitioner's viewpoint. Conceptual clarity in terms of because technical analysis, I believe, is also how much comfort a trader feels with his own tools. Every trader has his own set of tools which work best for her or him. So I think that given that thought, we have stressed on each concept to the core. So I have gone into the details of not only candlestick or classical patterns, but on averages. Like when we say moving averages, that's such a powerful indicator. But we tend to use the same kind of averages over and over again. So we have introduced the other averages. Where does adaptive moving average come from? And at least when you get a clarity, you know when to use it, because there are different moments at which different things work. And then we have stretched it into going into backtesting, because I think given when I look at technicals in a bigger perspective, like Akshay, you are telling as an academic, when I try to see it in the bigger perspective of financial market research, the risk management. So as a trader, you know how important managing your own money is, and I think that's most important when you're putting your the trade setup. So we have stressed on that. And on the bigger perspective, when we look at the risk management, when we look at risk mitigation, when we look at how much I can support with empirical evidence, all the things I'm doing. So we have tried to bring it, therefore, into backtesting. And I think going forward also, to bring that kind of discipline, now there will be a lot of move, because not everyone will have that perfect focus. When they see charts, we are swayed by news as much as, even as a technical analyst would want to believe that, this chart is all that matters. Very few, because Ashish sir, I have seen, he's very particular about this on the chart. Akshay, of course, you have explained in class so many times, and I have seen that focus, but it's not always possible. And if that happens, then to make it very disciplined, to make it very objective, there would be a kind of movement into algo trading. So we have moved into, finally into backtesting, into an introduction to algo trading, I should say. Also, so like Ashish was saying, the last chapter, in fact, when pandemic happened, we didn't have a chapter 11. We just had till 10, and then we were to write the conclusion. But then things were so interesting, and we were seeing a replication. And it's not only about from the technical analyst point of view. It's from anyone who is interested in market patterns, anyone who is interested in financial market research. It's just that how much of pattern movement can make sense. So that we wanted to incorporate, and therefore the entire thing about all the sectors, or how Nifty and Dow Jones was moving, all that we tried to put together. So I think for me the USP is that the conceptual clarity with the practical application, and of course the putting it into the bigger perspective of financial market research. So it's of interest to everyone. That's I would think we have tried to attend that. So and
I want to make a quick comment. Some very interesting observations there from you, Smita.
Hmm.
I was just reminded of this first interaction that I had when I went to a B school. It was my first ever talk on technical analysis, but I started with a balance sheet. I showed them the balance sheet of this company, and they looked at the numbers, and I said, I need only one response from you as a group. You either so you have this information, you tell me whether it's a buy or a sell, given the information that's available to you. So they looked at the balance sheet. They took like 15, 20 minutes, I distinctly remember. And they all had one response. It was a buy. Buy with everything that you've got. So then I said, okay, good. Your response is taken. It's not about whether it's the right response or the right response or the wrong response. So I took that response and then I showed them the chart. And the chart was making a series of lower highs and lower lows. And I said, if you ask me, I'm not going to buy the stock. And everyone was shocked. The collective question, I could see it on their faces, was that, are you looking at this one strange line that's making lower highs and lower lows and telling us not to buy despite this company having a fantastic balance sheet? I said, yeah, welcome to the world of technical analysis. That's what it was. That was a good decision not to buy. So that's just one very nice experience that I had as I started off engaging academia in the world of technical analysis. Awesome.
I wanted to ask you, Akshay, so where do you see, because, both of you have been there for a long time looking at charts, and where do you see technical analysis going, maybe 10 years down the line? Where do you think it's going to go, and what kind of things will be important?
This is the most difficult question from this interaction today. I don't know where I'm going to be in 10 years, forget where the world of technical analysis is going to be. But I can promise you one thing, it is never, ever going to go out of fashion. And I'm talking about conventional technical analysis. Now, in the last 3 years, given the spurt in algorithmic trading or trading undertaken primarily by machines, quant trading, people have begun to question the relevance of discretionary trading, where the discretion as to whether to buy, sell, or do nothing lies with the trader. People have also started doubting the ability of conventional technical analysis to have as much an influence in the decision-making process compared to the kind of influence it had maybe 20, 30 years ago. I believe that you can program the machine to do all it wants to do, but ultimately, who's programming the code into the machine? It is the human, and the human is always going to be driven by discretion, right? So, I mean, that kind of settles the debate once and for all. Conventional technical analysis is always going to have its time in the sun. There will be tools that will come and go, but I think the basic premise of price and time interacting with each other on a chart, that will continue to foster and do pretty well. That's what I think. What are your thoughts, Ashish?
So I think that the body of knowledge is only going to expand with the way technology has been moving, and the information flow, Akshay, is so heavy. What has
Yes.
happened, the problem that has happened is the information and the noise that has been generated because of the technology is tremendous. It's humongous. So I see that there will be need for an algos in order to filter out those. Machines can trade as long as you know what they are doing. The machine does not have an intelligence of its own, but definitely an algo is required because you want to filter out the noise and you want to understand what the overall perspective is given the current market situation. But discretionary trading will definitely not go away. This is a very similar discussion which if you would have gone back way in 2000 2002, where people talked about there is a technology boom, this is going to change the world, this is going to change the way financial markets are going to move, it's no longer going to have crisis again. It was said by in 2000 by the in 2002, if need be, by the known Fed chairman, I'm not naming him, we will drop money from helicopters if need be, but the crisis will never happen what happened in 2000. And come 2008, we saw what happened in 2008, right? Something like that should have been disposed, should have been like 150 years apart, but the market's greed and fear, which moves the market, is always going to be there. So whether it is 1929 or it's 2008 or 2020, it's the emotional greed and fear that moves the market. How do you measure those greed and fear? Is by the way the markets, by the way of charts that you see it on the screen. Now, algorithmic traders might say, I'm trying to code something. So one more thing that I find very, very tricky right now is majority of the people are behind algos, but they have no clue about domain. So if you are behind algos and you have no clue about the domain of that, how are you going to trade? Okay, because it is very important that you understand what is the domain, what is the what it goes inside the price, why it is fluctuating, what is happening. That is very crucial, but if you have no understanding of that, it's not going to happen. So the body of knowledge, the way I see, is moving from here on is in terms of uh, a more systematic approach towards technical analysis, a more quantitative approach, but everything is going to stay. Discretionary is going to exist. Elliott waves are going to exist because that is more discretionary, and algorithmic traders are going to increase day by day because that is what people think is the easiest way of making money. No, you need to understand the domain, you need to understand the patterns, and that patterns can then be coded into an algorithm. That is what is required. One very, very important aspect I think is going to happen post 2020. We are nearing the end of this um, year. What is going to happen is risk management is going to take a leapfold increase. Every fund house, every hedge fund, every trader has to rely more on risk management because risk is the only tool which is what you know. Price expectation of the future is an unknown target that you are deriving. It has not yet happened. That's an assumption, that's a forecast, that's an assumption. But what is there on the chart right now is only the risk management. So risk management is going to be increasing, and I think going forward over the next 10 years, risk management is going to be the focus. Top focus is going to be risk management. The next is going to be trading psychology is going to be becoming much more important because this pandemic is going to result into a mental pandemic also, is what I believe, because there have been a lot of Robinhood traders who have jumped in into the market exactly at the wrong time without understanding the risk that they are dealing with. So it's like you have given a matchstick to a child who is playing with it without knowing its power. That's what is happening. So going forward, I think risk management and algorithmic trading is going to be there, but discretionary is never going to go away. Come what may, maybe robots can take over, but discretionary is going to remain. So don't worry about that. Over to Smita. I
I'm so
think
happy to.
Smita might be able to add more, right? She's from the academic
Yeah, Smita.
background, and I've just
Yes, yes,
talked.
we are waiting for you to respond.
Yeah, right. So I know it's a very I mean it's very see it's like there is a probably when we look at it there's a lot of contradiction between academics and what technical analysis is saying, but then we see we are all saying the same thing. So I couldn't agree more to what both of you said, because obviously when we look at algorithmic trading, this is what I tell my students time and again: you have to your own strategy. You are the person who is coding, so unless you understand it, it's not going to work. And of course, the other thing is what both of you said, what Ashish stressed on the greed and fear sentiment in the market, and we have seen that with pandemic. We are going to see it more. I think going forward, this kind of mingling of what fundamental analysis we do of the market sentiment is also very important, that we take it in a quantitative, robust fashion, not just looking at news as it comes in. So there are a lot of sentiment indices which are already developed, fears index, and then there's economic policy uncertainty index, and they give a good clue to the market movement. But again, we cannot probably stick to only news going forward, because there's a lot of sentiment which is being reflected on social media, for example. So there is a need to take it all together. And when we look at the post-pandemic movement, I can share with you a little bit of research when what we started after the pandemic, looking at how the sentiment of uncertainty is behaving. We are seeing this so much. There is such a strong kind of we can linkage we can establish with the financial market movement, and that's very, very important. Maybe going ahead, we can merge it together, tie it together, make technical analysis stronger on that front. So I see that kind of happening, because with technology there has also been a integration across markets, and we now come to know of news happening in some remote corner through social media coming in, in a few seconds it's reflected, and of course all of that changes the greed and fear aspect of what we have been discussing. So I think yes, that kind of thing will be there. So it's again putting on I think the academic viewpoint also, when we look at understanding the markets, not only for the market participant, I think even for the regulator now sitting, when they are trying to regulate this kind of market and trying to think what they're going to do with the volatility, it would be so much important to understand, both from the point of view of the technicals, fundamentals, the sentiment, everything that is going to be very, very crucial. So yes, and integration, that's I think very much essential going forward.
Yeah, exactly. I think sentiment is going to be
It
very
kind
good.
of ties to what I want. Yeah, it kind of ties in very well with.
Yes.
Yeah, I mean, to sum it up, given the kind of views I've heard from both of you, I think in the future, even though the front end might be dominated by machines, there is no denying that at the back end, behind every machine, there will be a human. So that is never going to change.
Yes.
Absolutely.
Good. So my next question, and I'll start with Smita. Is this book going to launch the next bunch of celebrity traders world over, just like the Total Experiment did? What do you want your audience, your listeners to kind of take away from this book?
Yeah, so this is a very, very interesting question you posed. Yes, and I would want this book to reach out to not only the audience who is trading. Of course, yes, I want them to be more equipped with all the tools, with knowledge of all the tools. Knowledge is always very, very powerful, and also I also know the application of it. Also know where all technical analysis is, where technical analysis exactly stands in the entire framework of financial market research. But I would also want this to create, since you said, a celebrity kind of trader, also kind of create, reach out to audiences who would want to understand the market from this viewpoint as well. So I think this book is not going to be restricted to the trader alone. For anyone who is interested in financial markets, who would want to understand financial markets better, technical analysis gives a very, very important clue through its emphasis on patterns. Ultimately, at the end of the day, what technicals is telling you is that the psychology matters. The individuals who make up the market matter. It is what they have done, the kind of trades what they have done, which is again impacting the market, which is again impacting the economic decision making as a whole, because they are the same people. Market microstructure approach, when we look at it, they're the same people who are also taking economic decisions. So it's technical analysis then becomes a way to understand markets better through understanding how each human being in the market reacts, how we all behave in the market, what is our psychology, how it gets reflected in the prices. So I think that's what can be the key takeaway from the book. Yes,
Ashish,
Ashish.
your thoughts?
Okay, so the key takeaway, it's a very big question, because there is lot to take away. What we have done, both Smita and I have tried to put in our years and years of experience in that book. So explaining that in just 2 minutes of time is a cruel thing to do, but time is time, right? So the book focuses on time. That is what I want to talk about. It focuses on time, it focuses on price, it focuses on marrying across different methods together along with it. And it is a book which is going to be an eye opener for every single reader, because there have been a lot of questions you are going to raise up your mind. Your logical thinking about the markets are going to be questioned. what you have thought for centuries, or not centuries, you have not lived for that long, what you have thought for years long, you might be ready to get questioned on that, because that's what the book ends with, a note very clearly suggesting, if you still think that the markets are driven by by news and events, it's going to be questioned that big time. So I'm not saying news and events are not going to influence the price, but it is not the price, it is not the news that are going to be resulting as the only component why the price is moved. Very importantly, that you have to get out of this book is to become a very wonderful trader. Everyone I have seen as a trader are the ones who are the most anxious species on the planet. Okay, they are the most anxious ones because they do not have a disciplined approach to trading or investment. They keep jumping around on every stock tips that you get from a friend, or every news that you see it on the television, and then they jump in just to do what? Buy exactly at the high and sell at the low. That is what the majority of the traders have been doing, and that book is going to change your perception for good only if you are open to understand it in totality. But if you start again getting your ego in between and start thinking, okay, this works, this does not work, you are going away from the reality. The reality is whatever works for you works. So the key takeaway is book is going to make you a very, very good trader, a disciplined one. I'm not going to comment whether you are going to make money from tomorrow onwards. If you read the book in one day and I want to make money from tomorrow, that's not going to happen, because it's a journey. So the book is a journey, a tool which is going to explain my journey, how I started and how I have come across till to Elliott waves, NEO waves, and cycles and algorithmic. It's a journey of Smita, how she has been an academician for decades long and adopted technical analysis, not left quantitative and those aspects of statistical things, but adopted. So that journey is explained very detailed fashion by Smita. It's a marriage between an academician and a trader, and I think that is what is needed. So we have been successful in converting, not converting, but accepting an academician to talk about technical analysis. And my mission is to ensure more and more people, especially at the levels of decision making, should be accepting technical analysis for its for its power and strength, and not treat it like some essential. That is very important, and that book is going to do exactly that. So I think there is a lot to be taken away from the book, and every reader is going to be ending up with a lot of questions in the mind, but in the right direction.
Good. So on that note, I am pretty sure that everyone's anxious to get a copy of the book whenever it does hit the bookshelves, and I'm also very confident that you are going to get a lot of questions from people who buy this book. So make sure your phones are not on silent mode. Okay. So on on that note, Ashish and Smita, I'm so pleased you finally made this book see the light of day. I wish you all the very best. This book, I have no doubt, is going to be a roaring success, and we look forward to hearing more from both of you. Thank you so much, and over to you guys now.
Yeah, thank you so much, Akshay. I think, of course, the book has been a very long and tedious process also. And like Ashish sir has been saying, we have tried to make it as good as possible for everyone who gets a copy. But we have a fairly, large number of people who have supported us on this journey in trying to make the book very good. So I think I'll request Ashish sir to, we would like to thank them on this platform once again. So Ashish sir, if you can begin.
Sure. So the firstly, I would like to thank Smita to push me to get into something like this. So it wouldn't have been possible without her, and we putting together every effort that we have put in for getting this book out. And then now I like to thank across Robert Tractor. So without him, the Elliott Wave chapter wouldn't have been what it is. So a big thank for that, not only for endorsement, but it is his work, his he has been an inspiration for me right from the very beginning of 2008 when I started learning about Elliott waves. His work has been an eye opener, so I can't thank less anymore. And it has been a beautiful way, the way he has been across. And to be very honest, when I first wrote that to him that I have an Elliott wave chapter and would you like to have a look at it, and the way he was excited to talk about Elliott waves in the book was simply fabulous. So a big thank to Robert Pachter for endorsing and for being a mentor and on this journey for me. Mark Galveston, how can I not thank him enough, because he has been a fabulous person, a friend, a close associate, and he has written extremely well for the book as well. So I would like to thank Mark Galvesky. He has been a guiding force, because there are times in the life of a trader or an analyst when you go little off and you're not sure are you on the right path as what you are doing, and he has been a guide whenever it was required. I would like to thank Julius D. Campner for writing wonderfully for the book again, and he has been a founder of RRG, and he has done fabulous work, and he came across to endorse this book, so thanks to him as well. And also I would like to thank Kamlesh Jain for he has been with me during the Lehman days. We saw the bankruptcy together. The Nomura took over. A lot of things happened. So I would like to thank Kamlesh also for writing or endorsing this book across. So that's the thanks I want to give from the endorsement side. And I think Smita, your words on the endorsement, please.
Yes, and yes, on the endorsements and on the support, I mean, there's so much to share. Firstly, I would want to thank Sri Gurumurthy Mahalingam, whole-time director, SEBI, because, of course, his encouragement for the book and, of course, the endorsement he has given to the book. And he has been a mentor to us, to my faculty colleagues at NIBM for such a long time. It's so much of, we are so lucky to have him as a mentor. And I would want to also thank Professor Lucas Minkoff because his writing, his research on technical analysis is what got me interested into technical analysis. And he was so kind enough to look at the kind of integration I was trying to put in the first chapter and give his comments on that, and to help me back it with the research. And a big thank you to Ernest Chan, whose books on algo trading, quant trading got me interested into those areas, helped me understand it first, and of course for his kind endorsement of the book. And their encouragement for our writing has been very crucial. So we cannot thank them enough. Over to you, Ashish, to continue in the acknowledgements.
Yeah. So the next acknowledgement, this is from a very personal front, goes to CMT Association. I have not talked about it so far, but I want to point you one thing. 2008, I read a research report published by someone in Lehman Brothers, and there was a CMT designation written next to him. When I went across CMT designation, I was not even sure if I want to get into technical analysis. I thought, let me just go and have a look at it. I approached the association and tried to understand what is a CMT all about. In those days of 2008, and Akshay will agree with me, that were the days when it was a drop in a desert, I would say, not even in an ocean. It's a drop in a desert to find a technical analyst, and that too an association. And that's why my journey started. So had it not been for the CMT association, yeah, I wouldn't have been what I am here right now. So I would like to thank them enough. It is only because of their ecosystem that they have created across that I am able to be doing what I am doing right now. So that's I want to thank. Then on the personal front, I would like to thank my guru Sadhguru Jaggi Vasudev. Because of his meditative practices, I am able to juggle around a lot of things that I am able to do, and it's very important for a trader. It's very crucial that you are able to keep your mind sane. Very important. So it's possible only because of him. And then I would like to thank the team members of my office. It wouldn't have been possible if they wouldn't have been able to take care of the work that we have to do for ensuring the things should continue the way it continues, right? Without them, it wouldn't have been possible. And I would like to, on a very personal note, thanks my family members, my father, Harishankar Kyal. He has been a guiding force and inspiration. He has been able to fight all the ups and downs in the life, and he has been an inspiration for every one of us. I would like to thank my mom, Kiran Kyal, and she has been a wonderful female. Without that, it's not possible. So we wouldn't have been here without them. So that's very, very crucial. I would like to thank my brother Somesh, my sister-in-law Nita, and of course my wife Munmun, because she has been the one who has been always pushing me. I still remember I met with Akshay in 2008 with my wife Munmun, and she was not sure what I will do in my life, to be very honest. And she pushed me to do CMT. I did my CMT, and then she kept on pushing me across, but now she's regretting because she had pushed me too far. Okay, so I would like to thank her because without her support, and I have devoted a lot of time. So in 2009, post my marriage in 2008-9, I have been on the markets and on technical analysis more than spending time with her. So it's very crucial that she understood. So that's I want to thank, and all the kids in my family, Josh, Arna, Pritika, and Pratyush. Without them, uh, it was not possible because you need to maintain that balance of work and life, and they have been a guiding force for doing that. So I would like to thank uh, each one of the family members, and of course, I would like to thank the publishing house. Without them publishing this, the book wouldn't have been out. Over to you, Smita.
Thank you so much, Ashish. And yes, true. There are so many people behind a book because it's such a tedious and long journey when you are there on the book. So yes, I have also a lot of people to thank for the support that they have given. First of all, I would like to thank Sri Rajiv Avankar, who is ex CGM Bank of Baroda, for his very kind feedback on the chapter, especially chapter 10, the structure that I was doing on backtesting and algo. That helped me structure it well. And of course, a big thank you to the publishing house, to the Routledge team. And this is my second collaboration with them. I clearly remember in 2018 when my first book was just getting published, I had already started discussing with Shoma, how would this kind of a book be? How can we design it? And she was so encouraging. She is there. I'm very happy she is there today here on the panel. So a big thank you to Shoma Chaudhary from Routledge and to the entire team, to our very patient editorial team, Rimina Mohapatra, Anvita Bajaj, and of course the marketing side. Today Rajni is there, Rajni, Shailesh, a big thank you to them. I would also now begin on a personal note and first thank the Institute, National Institute of Bank Management, NIBM, because I have got to know of market practitioners through training activities that NIBM does, and both Ashish sir and Akshay sir, you have been coming here for a long time before I joined, in fact, and I have met you through NIBM, and I think that sums up the kind of very unique intersection NIBM presence between the academia and the industry practice. I think that's wonderful. That's what allows an academic like me to develop an interest in technical analysis and try to give back and weave it back to the research. So NIBM, of course, is my faculty colleagues at NIBM have been very important because every day interacting with them, I learn more, I know more, I teach well, I teach better. A special thanks to Dr. Elizabeth James, Dr. Dipali Krishna Kumar, Dr. Richa Verma Bajaj, and Dr. Gargi Sanati. They have been a constant support for me. The NIBM support team, we have the admin section, the PGDM section, the training program office section that allows us to work better. So big thank you there. And of course, to my students at NIBM, there are lots of my now of professionals. My former students, the alumni is there here. I saw them all. They messaged me that they have registered. It's, interacting with them over the years. So I've been taking this course for the last 5-6 years, and every time when I interacted with them, when I shared with them the notes, their feedback shaped. So most of the chapters in the book has been shaped completely by their feedback on it. So I cannot thank them enough, and they're very bright, very intelligent. What they say helps us to understand things better. So and of course NIBM also gives you a very unique opportunity to interact with market participants. So there I have learned so much every time I try to share my knowledge with them. All the case studies that I have brought in this book has been part of class discussions, and their feedback on it was very crucial. All the Python files, all the Excel files, we have gone over in the class, and what the queries that came helped to make it better. So a big thank you there. And of course, none of this would have been possible without the support of my family. On a very, very personal note, I would want to thank my husband, Akshay Trivedi, and daughter, Smita, for their constant support and encouragement. Akshay, his support, his guidance, his motivation has been so important for me, as I have for everything I do, and of course for this book. And he has always motivated me to excel, to do well in whatever I am doing. His feedback on my writing, on the presentation, has been so crucial for this book. I, of course, cannot thank him enough, and the support he has given me has been immense. Ashmi, of course, is an inspiration. She is a blessing. So interacting with her helps me see the world from a better perspective. Every day I learn something from her, and I think now that she has grown up and she discusses a lot of things, my research is also made better by the questions she poses and the kind of thoughts she has. This book also for me, traversed a very difficult time on the personal front, because while writing this book, I lost my mother last year to cancer. So she was very happy, very excited with this book, as she always was with whatever I was doing. And I really today miss her a lot, and I hope I make her proud. And I'm thankful to my parents, Arun Roy and Shubhra Roy, for because it is for them that I'm here. And on this very personal note, I would want to say that yes, we have tried to bring together in the book a lot of very interesting facets about financial markets. Technical analysis is a way to understand the markets better, and I think that kind of mingling of the research and technical analysis tools is going to be very important going forward. So I think yes, with that I would, from my side, I would pass it on to Akshay.
Okay, so that I think kind of sums it up from our panel discussion here. Once again, thank you so much, Smita and Ashish.
And I would like to thank Akshay also on a closing note, because he has been a
True.
fabulous person and I've known him for over the years and years of time. And thanks for agreeing to be a part
To
of
be
the
panel. Yes, thank you so much, Akshay.
really wonderful.
I couldn't say no. I mean, you're very very dear, to me, and I cannot but wish you all the very best in everything that you do in the future. So
Absolutely.
keep
And
rocking.
I am expecting a feedback of the book from you, Akshay, as soon as you get a copy of it. And that would be fabulous.
Only
Over to you.
only if you send me an autographed copy of the book will you get feedback.
Okay, that would be an honor. In fact, Proctor has also asked for an autograph copy. That shows a sign of modesty. Can you imagine that?
Yeah, that's really an honor.
Absolutely. Great.
Awesome, guys. Shoma ma'am, you want to take it away?
Yes, I'd just like to thank everyone. Thank you, Mr. Chinchalkar, for handing this over to me now. Good evening, everyone. Thank you once again for making time for this very interesting book launch this evening. On behalf of Routledge, Taylor and Francis, I take this opportunity to propose a vote of thanks to all those who made this possible. First, the panelists, Mr. Akshay Chaudhary, Electronic Trading Specialist, Bloomberg South Asia, Dr. Smita Roy, our author and faculty at NIBM, Mr. Ashish Kyal, our author and founder, Waves Strategy Advisors and Ashish Kyal Trading Gurukul. Thank you for thoughts and for a very insightful and interesting discussion. And thank you, Ashish, for coming up with this wonderful book. We would also like to thank Shri Ganesh Kumar, former Executive Director, Reserve Bank of India, Dr. Mridul Sagar, Executive Director, Reserve Bank of India, Dr. Dukhabandhu, Chief General Manager, State Bank of India, Shri Sanjay Naik, Chief General Manager, State Bank of India, Professor Vikas Srivastava, Professor No, Shri Sriram Ramnarayan, former country head, Thomson Reuters, South Asia, and the NIBM faculty and family. And of course, dear listeners, thank you all for joining in. It's great to have all of you with us today in what seems to be the new normal. At Taylor, we are pleased to publish this volume, which provides a comprehensive guide to effective trading in the financial markets. It blends practical insights and research updates from professional trading, investments, and financial market analysis. As we've been hearing, it's brought to you by a rare collaboration of an academic and a practitioner. And this book will hopefully prove to be essential for not just the professionals, but also the scholars and researchers of finance, economics, and management studies. The book reflects the time-honored tradition at Routledge and Taylor and Francis of publishing works that make a difference. Our content spans all areas of humanities, social sciences, behavioral sciences, science, technology, and medicine. We have published in a range of formats as well. And our Routledge Originals program extends the Routledge tradition of excellence through academic publishing in social sciences and humanities to India and South Asia. I take to thank the panelists once again, the authors and our esteemed guests for taking time out to attend the launch of this very topical volume today. Last but not least, I also take the opportunity to thank once again Smita and Ashish and their team that has helped us to put this together. It has been an absolute pleasure to work with all of you. I would also be remiss if I did not mention my colleagues Rumina Mahapatra, who worked with me on the book, and Sailesh Kumar Shahe and Rajni Dhingra, who made this book event possible. Thank you once again for joining us. Stay safe and good evening. Rajni, sign off now.
Such a pleasure. Take care and be safe. Have a good weekend, everyone.
Yeah,
congratulations once again, Ashish.
How to purchase the book is what Rajni is going to talk about. So the most important
First of all, thank you all for sharing your valuable thoughts, for conducting such an insightful session and experience with our virtual audience and industry experts. I am excited to share with you all that we have received so many comments that it's an extraordinary and excellent discussion. They want to purchase the book. They're very, they're very happy that they are here with you. They're happy to meet you, Ashish sir, and they have mentioned this thing in the chat that they're following with you, and they really want to know the book price, and everyone wants to know that how we can get the author signed copy. So here our trick has worked. Now, in this virtual times, what we have done is that we have introduced the virtual autographs, and this is by our author Ashish Kyal and by author Smita Roy. And we would be sending across the signed author, the virtual author card, to you, all the attendees in your inbox, along with the session recording. Thank you so much, all three, for the vote of thanks. And just a reminder to all our attendees, if you have any questions, you can still drop mail to us on the thank you note email or on this email itself that you have received from GoToWebinar, and we would be sharing your questions with all the panelists to revert to you. Thank you, everyone. But before we wrap up the session here, I would like to remind you, which I have shared with you personally in the chat box also, that we would be sharing the session recording and order form with the discount code LAUNCH20. Launch 20 is the discount code to avail 20% discount, especially introduced for our virtual audience and for our virtual audience. As we all know, today is the global release date of the book, and especially South Asia edition has been introduced for just rupees 995. Book is available for pre-order on trivedikyal.com. You all are aware about it, trivedikyal.com. Hurry up and order your copy today to avail 20% discount and use code launch20. Book should be also available on amazon.in, which is the India website, soon, and you all would be notified via email to purchase via Amazon too. Stay tuned to know more updates. And thank you so much to all the panelists, to all the speakers, and to all our virtual audience. Thank you for your wonderful participation and your patience. We appreciate you being here, and we hope to meet you again. Have a happy weekend.
Thank you so much, Rajni. Thank you.
Thank you.
Thank you very much.
Bye-bye.